Sustainability Reporting Standard Board of ICI. I, myself, CA Shweta Goyal, Secretary of Sustainability Reporting Standard Board of ICI, extend a very warm welcome to all the eminent guests, speaker and moderators of today's session. We are having a seventh session of our webinar series, Demystifying Sustainability Catalyzing Growth. Today's session is centered around a critical theme of navigating planetary boundaries relevance for BRSR and chartered accountants. We are honored to have with us uh, our esteemed speaker of today's session, CA Ramesh Agarwalji, and our moderator for today's session, CA Ankur Kishore Sangoiji and CA Manisha Mangeji. And we would also thank our chairperson of SRSB board and vice chairperson, CA Preeti Savlaji, chairperson, and CA Dr. Sanjeev Singhal vice chairperson of SRSB board, for having this opportunity of conducting a webinar on various topics on sustainability. Now, over to you. We would like to, start the session. We request ma'am to just take it forward. Ankur sir, please take it forward.
Yes. It was my great pleasure to introduce our today's speaker, Rakesh Agarwal. Rakesh is based in Mumbai and is a part of assurance practice, Price Waterhouse with over 2 decades of consulting and industry experience, specializing in sustainability, IFRS standard and assurance. He advised on ESG, focusing on sustainability reporting framework and emerging themes, helping clients set realistic ambitions within their existing governance and operating models with a minimal changes in their operational process. His work integrated financial statement, products and positioning and corporate strategies, promoting data-driven interactions amongst management and stakeholders. He collaborates with the drives teams to assist clients in meeting stakeholder commitments. With over a decades of Reliance Industry Limited in a 200 billion USD conglomerate, Rakesh sir has held a significant senior leadership role as a group head in sustainability reporting, IFRS Center of Excellence, Risk and Audit Operations, supporting executive management, directors, investors, and regulators. An active speaker, panelist, and author, Rakesh has served a board and professional institutions. He is a chartered accountant and alumnus of Harvard Business School, GF 2014, and MIT, and recently, in a year-long career break of deep learning, Rakesh has completed 9 papers in ESG from MIT and Harvard, in addition to self-directed reviewing ESG research papers and promotional sustainability frameworks. Rakesh has developed state-of-art of reporting solution of clients addressing ESG concerns. His ESG reports are consistent yet comprehensive, meeting the core expectation of over 15 sustainability frameworks. Emerging themes, policy, advocacy, product life cycles, impact assessment, leveraging a data in public domain, scope of 3 emissions alignments with the SDG, NDS, and establishment original research within the eye for the compliance and strategic differences are often the part of the reporting journey. This is a reflect in the company's sustainability reporting marked by ESG differences and verifiability as evidence in assurance integrated sustainability reports. So let's welcome the today's speaker, Rakesh sir, for the session.
Hi, wishing you all a very good evening.
Yes, good evening, sir. But just sorry to interrupt 2 minutes. We'll also have the introductory sessions for our chairperson.
Please,
Ankur, can you please just do the briefing for Preeti ma'am? Actually, we all know Preeti ma'am well, but then also this is just a formality of the session. So please, Ankur.
Yes. It's great pleasure to introduce our chairperson of the committee, CA Preeti Parasawla. She is a Central Council member and also hold the key roles in the chairperson of the Sustainability Reporting Standard Board and the Women and Young and Members Excellence Committee. She is vice chairperson of the Corporate Law and Governance Committee and Group of Enabling Lifestyle for the Environment Life, and is on the board of discipline and other committees internationally, and she represents India on IFRS Foundation's ISB Sustainability Standard Advisory Forum and has a chair as SAFA Sustainability Board. In the corporate world, she serves a public interest director at NSE Clearing Limited and She is an independent director and audit committee chair of several leading companies. Her contribution extends to a social impact initiative as a director at the Institute of Social Auditor of India and as a governing council member of the Social Stock Exchange (BSE). A noted speaker and mentor, she has been instrumental in launching several network key initiatives in the Sustainability Board and Women Committee of ICI. So, welcome to the Preeti Madam. Oh. So, I request Madam to introduce another Vice Chairman of the committee.
Sir, just 1 minute glitch. In the meantime, we request Rakesh sir to please continue.
Thank you. So what I'll do, I'll first share the screen. Yeah. Let me take a step back. When we all started with BRSR and before that NVG guidelines, it was all in relation to climate change. And that was the key driver. Now, taking a step back, climate change is one of the planetary boundaries on the Earth ecosystems. When we call Earth ecosystems, there are 9 aspects within the planetary boundaries on which we need to act within the safe operating limits. Now, climate change, CO2, and a lot of related things are just a cluster of it. So, what we thought about is to talk in this session more about what are the planetary boundaries. And once we go slowly about the planetary boundaries, we will quickly touch base. What is its relevance to BRSR framework? BRSR framework we all are familiar with. So the framework portion will go very fast, maybe in a couple of minutes, which will be more in the nature of strategic refresh. Having done that, we'll go by principle wise. Each of the element of BRSR framework, how does it relate to the planetary boundary and vice versa? Now, BRSR framework is one of the global best framework, and whenever we are amongst the best framework, there is interoperability between various frameworks. So we'll quickly look at the connections with various frameworks without getting into comparison and differences. Having done that, we'll look at from the perspective of what is in it for CFOs and what is in it for auditors, that is overall chartered accountants. So the focus of the session is taking a step back, understanding the planetary boundaries, then how these planetary boundaries are linked to BRSR principles. And when we look at BRSR principles, we quickly figure out the interoperability between BRSR framework and other world-class frameworks. And then we look at the role and the relevance with chartered accountants. Having done that, if time permits, I'll also share a research paper, which is a valuable asset to CFOs as a checklist for them to show value to their organization. It can be used both by auditors and CFOs. If time permits, I'll share that research paper, which is based on the primary research of 30 various research papers. And each of the research papers have been written by respective PhD holders, peer reviewed, and have faced the live vivas before it has been published, And 30 such review papers relating to CFO related matters have assimilated and made a secondary research conclusion out of it. If time permits, I'll share that on the screen as well. In any way, I'll simplify the key messages out of it, whether time permits or not. So that's the broad background with respect to the coverage of the session. For this session, I have one of my fellow chartered accountants, Ms. Khushbu Malde, who has actively involved in making up this presentation slides and pulling out other relevant details. A big thank you to her as well. Before we get into the theme is what? Most of the chartered accountants, they either measure or report or audit. So in other words, rather than doing things, we measure, report and audit. And here is the timeless learning. You cannot manage, an organization cannot manage what it can't measure, and you cannot measure what we do not understand. And this has been said by eminent management guru Peter F. Drucker. Now, here the last part of the statement is what you do not understand. So, what you do not understand is something that we'll be focusing upon as a starting point, which is planetary boundaries. The Institute of Stockholm carried out the original research of planetary boundaries. They identified 9 planetary boundaries, and these 9 planetary boundaries have been assessed year after year. It has been assessed thrice in last 2 decades as to whether the Earth has crossed these planetary boundaries or not. And here are their findings. In 2009, 7 boundaries were assessed and 3 were crossed. Later on, in year 2015, again 7 boundaries were reassessed, and it was found that out of the 7 boundaries, that is, which are supposed to operate in safe boundary limits, we have crossed 4 of them. And in 2023, the same 9 planetary boundaries were assessed, and we found that 6 have been crossed. That means Earth system has exceeded its capacity in terms of safe operating limits, and we have crossed. And on the intensity of crossing the planetary boundaries have increased from 2009 to 2023. One such planetary boundary is climate change. That is this portion. And this has been largely a subject matter of discussion when we talk about scope 1, scope 2, and scope 3 emissions. Here there is a big message for all of us. This research was published in 2015. So what happens is, over a decade, you will have a Paris Agreement, you have SDG goals updated, then you have standard setters coming out with voluntary standards, then you have auditors. Once the standards are made mandatory, the auditors audit. So there is a time lag. When the Earth exceeds its planetary boundaries, that is this portion, and the standards are issued and required to be reported by chartered accountants. And this time lag from 2015, it happened in year 2022, 21, 22. So it was a 7 to 8 year time lag that once a planetary boundary exceeded, we as chartered accountants started reporting about it 7 to 8 years down the line. Now, what happens to the new planetary boundaries that has been exceeded? Example, novel entities, biosphere integrity, change in land use system, biogeological flows, and fresh water. These were not there earlier. So what happens is the standards in relation to this are getting updated. We are calling IFRS S1, S2, and also CSRD. So these standards, when these are published, which is anyway published, sooner or later, it will shift from voluntary adoption to mandatory adoption. And once it goes for mandatory adoption, it will go for audit. And when it's go for audit, the roles of chartered accountants explicitly comes into play. So what we see in BRSR in times to come, things from here, which were earlier concentrated over here, will be now concentrated more over here, because these are the matters of importance in times to come. That's the aspect of planetary boundaries that is overarching, overshadowing the things of reporting, including BRSR, and we end up corporates end up giving information and we end up auditing it. Now, the question arises, what these 9 planetary boundaries are and how these are measured as far as the safe operating limits are concerned. The next section will go into it. It will talk about the 9 planetary boundaries and what are its limits. The moment we are out of it, then we'll link it to the BRSR principles of today. And tomorrow, in the name of materiality, those principles will ask indirectly these parameters. So our learning is not only about the past, but also of the future of BRSR that will cover in terms of relevance. Now, coming to just pure science. The first part is climate change. That is the first planetary boundaries. Now, climate change is measured in terms of particles per minute. That is CO2 concentration. As we speak, Earth can have a planetary boundary of 350 ppm of CO2. That is 350 parts per million of CO2, which is the limit. However, as we speak, we are having 417. So we say that the planetary boundary has exceeded. So once you look at BRSR or anything, everybody is talking about scope 1 and scope 2 emissions, and that's a reportable thing. Now, this planetary boundary has an interplay of what is the radiative forcing, that is watts per meter square, with respect to a measure. So Earth should ideally reflect 1 watts per meter square, and presently we are reflecting 2.91 watts per meter square. Both use interchangeably. The more practical measure is 350 particles per minute, and it's widely used. So the narrative that we are launching or reporting and launching is scope 1, scope 2 emissions, and also scope 3. The second planetary boundary is biosphere integrity. What does it mean? Earth, the life of the planet, is believed to be 13 billion years, out of which 4 billion has passed. There was a principle of natural evolution, natural selection of species. As we speak today, by some measure, it is believed that there are 8 million species, categories of species on the planet, both plants and animals. It has increased over a period of time. However, now it is decreasing year after year. So the measure is what is the extinction rate of species per annum. The planetary boundary is for every million species, if only 10 species goes away forever, then it's a safe planetary boundary because other new species will emerge. But as we speak, more than 100 million species per annum are getting extinct. And with this rate, you won't find any living thing within a million years on the planet. So that technically is known as biosphere integrity. And the related disclosure that people talk about is biodiversity. You'll see a lot of literature coming in the name of TNFD and to some extent TSFD in relation to biosphere integrity. And this part is gaining prominence. The third, and we have exceeded that planetary boundaries, it is marked in red. The third planetary boundary, which we exceeded in year 2009, and now we have not exceeded. That is, we have successfully mitigated is ozone depletion. So it is no more a matter of concern even if we maintain a status quo. The fourth planetary boundary is biogeochemical cycle. This relates to nitrogen, phosphate, and potassium. here comes a big surprise. Everybody talks about that we have an oil for only 50 years. Do you know we have phosphates only for 250 years? And what's the role of phosphate? For 1 kg of phosphate, you have 130 tons of fruits, vegetables, and other things, which is put into the farming. I repeat, 1 kg of phosphates enables 130 tons of production. But this phosphorus, more than 80% of the phosphorus is only in South Africa, 3 countries. And the total reserves at the current consumption rate, if we look at it, we have reserves of only 250 years. After 250 years, at the same rate, the entire phosphorus consumption is over. The way we used to talk about oil. So that influences the scarcity and how do we recycle. There is also a negative effect of biogeochemical cycles. As we speak, the safe limit of both nitrogen and phosphorus is 62 teragrams and 11 teragrams respectively. We have exceeded that level at the current level of consumption. The impact is that my rivers, my soil, and other things get polluted. And the aquatic life and biodiversity, that is, it indirectly then goes and affect biosphere integrity. Here again, we have exceeded those things. Then fifth is change in land system. Here the measure is percentage of forest cover. Even if we maintain 75% of the average forest that was during pre-industrial level, it should be fine. And within forest, they have categorized 3 levels. That is temperate, boreal, and tropical. Tropical is towards the equator. Boreal is towards Antarctica kind of stuff, and temperate is in between. So if we maintain the forest cover, there are lots of implications. For example, the moment you cut forest, once you cut forest, the average ability to absorb water in the soil decreases by 60 to 105 mm. And because the water goes down, a lot of other things, earth is made of air, water, and soil. The moment water goes down, it impacts to a great extent all the other interplay, be it humans, animals, or plants. Then the sixth aspect, here also we have exceeded the limit. So anything, you will be hearing a lot of things in relation to forest, deforestation and afforestation, and that is tracked. Now, these days it is also tracked using satellite images. The sixth is atmospheric aerosol loading. Here the boundary is 0.1. And again here, although we have not exceeded as a global average, we have exceeded in parts. For example, when we look at India concentration or Southeast Asia or China, we have exceeded the limit. But as a planet, we have not exceeded the limit. The seventh is ocean acidification. Here, technically, we have not exceeded the limit. We are likely to exceed with the current rate of flows relating to this biochemicals, which is flowing back from agriculture to river and gutters, from gutters to ocean. For all practical purposes, ocean acidification is here to stay. And what happens because of ocean acidification? The first and the foremost is aquatic life dies. How? The more the phosphorus and nitrogen is in this thing, it culminates into planktons. Planktons float on the water. The moment it floats on the water, sunlight is not able to penetrate within the ocean. And when sunlight is not able to penetrate within the ocean, you have destruction of corals. And once there is destruction of corals, the entire aquatic ecosystem is getting destructed. That's the impact of ocean acidification, or in other words, spraying basic chemicals, that is nitrogen and phosphorus, in addition to insecticides that indirectly affect the life in ocean. Then freshwater changes. Here also, we did not want it as a safe planetary boundary. We did not want it, whatever the blue water we inherited, we should not have changed it by more than 10%. And so is the case of green water. Now, what's the difference? Blue water is water on the surface and water reservoir below the surface. Green water is water that is captured in soil. Example, Amazon rainforest. Each tree in Amazon rainforest, on an average, vaporizes 1200 liters of water into the atmosphere, which is extracted from the soil. And millions of such trees, when vaporizes, the vapors flows to the other continent and you have rains over there. So once we disturb the green water ecosystem, and suppose if the rains are thousands of kilometers away, there are hydel projects, there are power plants which are running because of the stream flow of water. The entire ecosystem is based on that. The moment we change green water, the life is gone. Similarly, blue water, that is water of surface, you hear now again the dispute between India and Pakistan. It is in relation to blue water. And it is only a matter of time that blue water is generally appreciated by masses. Green water, we as chartered accountant needs to appreciate much more because it's an invisible change that happens. And once it happens, it cannot be reversed. The ninth item is in relation to novel entities. Novel entities means any new substance that we created, which we do not understand the side effect of those substances. In other words, toxicology of those substances, which are either given to air, water, or soil, is known as novel entities. Technically, DTT, long time back, was marketed very heavily and now it has stopped. Reason, it was harmful like anything. As we speak, there are 80,000 novel entities on the planet. Anything which we do not understand, we should not throw it on the planet. At this point of time, very little efforts are made to understand the impact of products. For most of the products, we do not understand impact. Plastics, we started throwing 5 decades back. We understand the impact now. So as we speak, there are 80,000 products and other substances which are being thrown on the planet and we do not understand, and this impact is unknown. So in sun and substance, there are 9 planetary boundaries. A, climate change, that is CO2, then novel entities, then ozone, which we had it positively, aerosol, which we have positive, ocean acidification, as we speak, it has already crossed. So as we speak, instead of 6 planetary boundaries, 7 has already been crossed. But this material was published in 2023 by the scientist, and more than 1,000 scientists have agreed on that. Then earlier we used to track only NP, nitrogen and phosphorus for biogeological cycle. Now it is one more, potassium, that is being tracked. Fresh water, both in terms of green water and blue water, are being tracked. We have exceeded. Land use change, that is forest cover, has been changed, and biosphere integrity has been changed. So as we speak, 7 planetary boundaries are crossed. We as chartered accountants have primarily focused on CO2, which got reported now, and other reporting disclosures are voluntary. It's only a matter of time that all these indicators will be captured in the upcoming reports. So that's a brief about planetary boundaries. Now let's look at how does these planetary boundaries impact my BRSR principles even today. I repeat, these planetary boundaries are impacting the principles under which I report in BRSR even today. Let's take one by one. The first is climate change. So when we are talking about climate change, We all know CO2, and in relation to CO2 related matters, scope 1, scope 2, scope 3, we are tracking and giving also assurance on the most promisable numbers. When we talk about biosphere integrity, one of the leadership indicator in principle 2 is product life cycle sustainability assessment. And this life cycle sustainability assessment is not necessarily done by all the 1,000 companies. We would strongly urge companies in pharma, agri, and FMCG sector to look at it, because this planetary boundary has been exceeded. Even if they are not reporting, but if they are discussing anything in the section of corporate governance or anything in the section on risk assessment, we would like to understand from the management as a chartered accountant as to how they have taken care of the concept of materiality in these industry in relation to biodiversity loss. For that, it's better that we ask whether a study on product lifecycle sustainability assessment has been done in relation to these entities for at least the principal products. And that's the relevance of planetary boundary with principle 2 of BRSR. The third planetary boundary, that is land system changes, this impacts my principle 6 and principle 8. That is linking of ESG disclosures into my integrated reporting, which primarily comes from forestry related industry, I'll say largely real estate and agriculture. The moment you talk about real estate and agriculture, it's nothing. Building of roads and urban infrastructure. And once you build a road, suppose on a 100 square kilometer plot, I repeat, 100 square kilometer plot, you construct only 3 or 4 roads cutting the plot. The entire thing, which was as a reserve forest, sooner or later, with human penetration of 3 to 4 kilometers from the road inside, on each side of the road, destructs the forest. And the moment there is a road, there is a destruction of forest sooner or later. So that's the change in land use. Similarly, when we talk about water, there are a lot of indicators even in BRSR report which talk about fresh water withdrawal, its recycling, efficiency. Now, when you look at water usage, it is more so in textiles, FMCG, and chemicals. Chemicals when added a toxicology element of it. Similarly, when we look at biogeochemical flows, that is nitrogen and phosphorus, the principle impacted for the assessment of leadership indicators mainly are principle 2 and principle 6. Excess fertilizers impacts river soil. It is mainly linked to agriculture industry or FMCG or food procurement, so on and so forth. And to ensure the quality within the supply chain is our responsibility as a corporate. Ocean acidification, it is indirectly relating to supply chain for companies which are dealing with sea products. Very less companies in India are dealing with sea products, but because of ocean acidification, and it's a very, very long-term risk rather than a 2-year, 3-year, or 4-year risk, it's generally not considered to be material, but doesn't mean that we lose sight of that. Atmospheric aerosol loading, we generally hear about Delhi, especially during winters. In fact, across India, although technically world has not crossed, urban India generally faces is at the receiving end. And this principle is important for activities which are centered around urban areas directly and indirectly for any businesses. Similarly, ozone depletion, it was an issue. No, it is no more a big issue. It is very restricted to few industries generally dealing with coolings, that is refrigerant, AC, so on and so forth. wherein chemical called hydrofluorocarbons, which escape into the atmosphere, takes 5 or 6 years of processes to start deplete the ozone layer. But at this stage of time, because it's a prohibited substance or limit or only offered for limited use, the impact for this principle in reporting is negligible. Novel entities. Technically, something which is not stopped by law, you can do it. But I repeat, technically, management will argue that you can do it. But globally, including in India, there is a principle of retributional justice. I would like you all to note the key word principle of retributional justice. Which in other words means, while I was in the business of doing something, I innocently did the harm because there was no mandate to stop it, nor I knew it. But because there was a harm, whether I took enough steps for me to know it, and if I have not taken steps to know it, then it is my responsibility to stand up and face civil and criminal liabilities. This principle is getting traction globally and locally. So, in other words, Principle 2 and Principle 9, wherever or whichever entity is dealing with novel products which we do not understand the impact, you should insist with the client that they should get the study done. And as a chartered accountant, you can rely on that study that there is no impact or negligible impact. And that is novel entity. So, to sum up, all the 9 aspects of planetary boundaries are directly relevant to BRSR of even today. In times to come, due to interoperability with various standards, whatever is there in global standards, sooner or later, it will be discussed for adoption or taking the good things out of those standards come in relation to Indian context, which will be for all practical purposes be applicable to us. With this background, now let's look at in less than couple of minutes, where do we today stand in BRSR? And then we'll talk about the emerging things which sooner or later is only a matter of time will be adopted by India Inc. as part of reporting, either voluntarily or by mandate, by whichever entity it may be. It can be through SEBI, it can be ICICI, or it can be uh, anything. For example, globally, we have accounting standard. Then we have Indian burden of standard. Then we globally had IFRS. Then we have Indian version of IFRS. More than 90-95% of the material is same or similar. So the current version of BRSR, when we talk about, it has 62 compulsory questions and 42 voluntary questions. And directly or indirectly, these 42 voluntary questions covers the 9 planetary boundaries directly or indirectly. We may not understand the rigor of those, but the required disclosure exists, which expects us to understand what planetary boundaries are and whether we have taken it in right spirit for the purposes of disclosure. Other than that, there are usual stuff about the entities, 24 questions, about the management approach, 12 questions. Principles, there are 9. We all are aware of those principles, and this session is not expected to touch much about the 9 principles. We have series of sessions week after week, and one of those sessions in the initial sessions in the live recordings you'll be already aware of. If not, first of all, most of us are aware of what are these 9 principles. Second, there is a lot of publications and things which people have flown into or themselves executed. Third, within the same series of these seminars that we are having, the earlier seminars have covered it. So it is just meant for a recap that I have retained this slide. But the point that I would like to mention is this. whatever you have seen in BRSR, there is an element of interoperability. Say, for example, when you're talking scope 1 and scope 2 emissions, the guidance is coming from greenhouse gas protocol. It has not been codified in BRSR, but the world follows this way. When we talk about what are the principal risk or principal products, then directly or indirectly, there is an intersection with TCFD. When we are talking about disclosed organization strategy, there is an intersection with integrated reporting. When we are discussing what are the material institute for the jurisdiction, that is water stress and other kind of stuff, directly or indirectly, what are the important goals, we try to link it to sustainable development goals. Now, when we are talking about biodiversity, TNFD will come into play. When we are talking about standards of reporting, the way we had IFRS earlier, now you have ISSSP. GRI was already there. So the way the items were calculated in GRI, similar calculation has been retained by practice or by industry practice in BRSR. So this is the gamut of all the global prominent frameworks with a time frame, with a time zone, time arrow, that what started in 1997 versus where we are today. And here you see a lot of merging within the standards to make a meaning out of it. In other words, word is converging to a here, only this set of standards. Sooner or later, it's a matter of time. Across the world, all jurisdiction, by whatever reporting they have, be it in the name of annual report or requirements of Companies Act or SEBI or BRSR as part of SEBI, sooner or later, it will converge over here. So the question is, what are the things that we are supposed to know to understand the interlinkages of planetary boundaries with what we are doing today? There are legislation-based GAG standards, that is CSRD, one of the best, EU taxonomy, Security Exchange Commission of United States, and California bill. There are investor-led standards. Investor-led means India is a net borrower. And even for equity shares, there are net investor of FIIs. So these investors, the standards that they are looking at is TCFD, TNFD, IFRS 1 and 2, that is S1 and S2 that we spoke about what is converging, and CDP. There are ESG related things which are generally known in the world. SDG, that is Paris Agreement. You have United Nations Global Compact Principle, and you have long-standing GRI. There are energy and emissions relating standards, that is GAG protocol. And these days, above all, there is SBTI, science-based targets to set net zero, and then they track it. So irrespective of whatever standard you are, when we talk about BRSR, when I compare interoperability of BRSR with other world-class standards, it's largely there. For sake of, only for sake of understanding, I'll just quickly refresh. ISSB look at broader standard plus climate specific standard. So is the case of EU. They have shifted recently into climate specific or focus area related standards. We adopted standard early. Now it's time that we will also sooner or later converge. Then relationship between TCFD, that is risk related, if I may loosely say so, is largely aligned. All the standards look at the standards of materiality using single materiality concept, which is financial materiality. The best being double materiality. So it's only a matter of time that this will seep in over here and also here. The best disclosure of emissions are cumulatively all scope 1, scope 2, scope 3. Scope 3 means value chain. and it is only a matter of time, even here, which is lagging behind, they will disclose. So limited message to all of us is BRSR is interpreted wherever BRSR itself is not clear about how it needs to be computed, how it needs to be measured, or what needs to be measured, or what is important, then we make a references to these standards to understand. It is from this perspective we would like to say BRSR is interoperable with other standards. Now, having covered A, planetary boundary, and B, interoperability of BRSR, now let's come to only pure key challenges in India environment in relation to planetary boundaries. First, land degradation has become unsustainable because of current agricultural practices, leading to soil erosion and also loss of arable land. Similarly, biodiversity has been largely destructed on account of destruction of forest and also in because of reduction in the quality of blue water. There has been water stress. That is, there is the groundwater either is extracted more than what is the natural replenishment cycle on the planet. Now here the question is, what does extraction means? Does extraction means your company has dig out a bore well and then it is extracting water? No, 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 no. Largely it means your company is into products which consumes water more than what it is getting replenished. An example, if you are an agri-based company, 1 kg of rice is equal to 1100 liters of water. If you are into a business of meat, 1 kg of beef is equal to 50,000 liters of water. So if you export only 1 kg of beef, you have exported 50,000 liters of water. And that's the source of water stress. So the kind of agricultural practices that we do, are we replacing beef with rice and rice with, say, wheat? Because wheat consumes only 300 liters of water. So it's the change in the pattern of production and responsible consumption. And it's a catch-22 situation that decides the groundwater level that is we are facing. So is the case of air pollutions. Technically, we have not exceeded the limits, but if you go to say deep into the mountains, Himalayas, you like it. Air is fresh. But when you are in Delhi or Mumbai, you feel the difference. Why? Because it is more a regional pattern. Aggregated level, we might be good, but the pollutions should be that most of the zones should be pollution free zones for all practical purposes, but it's not. So pollution levels technically high in India across where the population stays, impacting the human beings, but on a weighted average global basis may or may not be. So those are India specific challenges for planetary boundaries. What is the business implication? And once there is a business implication, there is a role of CFO. And once there is a role of CFO, whatever he does, it gets audited. The business implications are three. First, there is a physical risk. And the language is taken from TCFD or IFRS S1, S2, or even CSRD. They use common language with respect to that physical risk. Physical risk is damage to your business operations or assets. Operations can be within the supply chain or the assets on account of harmful impact of climate. It can be flood, drought, or lack of fishes in the lake because of toxicology and a lot more. That's the physical risk that we carry in our businesses. Even if the same area is having floods, the frequency of the floods, which say erstwhile used to be say once in 100 years, if it goes to once in a 10 years, that is also due to climate change, hurricane, and a lot more. The second category of risk, which gets covered and reported, is transition risk. Transition risk is what? Because we know that there are harmful impact, the society try to rise up to mitigate those impact. And because the society tries to rise up to mitigate those impact, there are changes in government policy. There are changes in what kind of products can be marketed. There are changes in technological advancement, like green technology versus erstwhile technology, which are aimed at environmental sustainability. Earlier, the transitional risk was assessed on the basis of only one planetary boundary, that is environmental sustainability, CO2. In times to come, transitional risk will be assessed within the ambit of 7 planetary boundaries. Example of change in policy is, say, introduction of carbon tax. Example of change in policy is no industry can be set within a particular radius of Taj Mahal. No industry or no trucks are allowed, goods trucks are allowed in Mumbai city during the day. It is only during the night time. So there are a lot of transitional risk that happens with respect to policy. Market shifts that people start boycotting products which are not made from sustainable sourcing. Example, animal cruelty related products are practically nowhere to be seen. Third, technological advancement. Anything which is not green, example, air conditioner and at a larger scale windmills, which has lot of noise, are not allowed to be marketed. The moment it is marketed in your own building, there is an objection from your neighbor. These products no more exist, which used to exist 2 decades back. That's technological advancement, because nobody wants decibels of noise to exceed the acceptable limit on sustainable basis. Similarly, there can be legal implication or even criminal implication, both civil as well as criminal implication legally with respect to the damage that we do to the environment. Example, Volkswagen case, penalty of more than $40 billion. Similarly, when there is a leakage of oil in the ocean, there are billions of dollars of liability attached, primarily because of environmental impact. In times to come, I will see more liability coming on account of novel entities, that is selling products today where we do not understand or we refuse to acknowledge the harmful consequences to the environment. Now, which are the industry in India which are materially impacted by these planetary boundaries? First, agriculture, primarily because of fresh use of water, change in land use. I'll also add now NPK, that is nitrogen, phosphorus, and potassium. Similarly, for manufacturing, please note I'm not including electricity in relation to manufacturing. I'm including mainly biogeochemical flows and novel entities. That's the risk that we carry. In relation to energy as a whole, I'm using 2 things. One is CO2 and second is atmospheric aerosol, which are primarily SOx, NOx, and PM 2.5 loading. So that's the thing that is impacting us. And what's the implication? Once I set up a company for 20 years, the capital cost is sunk. The implication is I have to run the same company. So there can be increased operational cost on account of carbon taxes. There could be increased regulatory compliance expenses. And above all, reputational risk, because the standards of tomorrow will be higher than the standards of today in relation to environmental and planetary boundary expectations. And that's the risk of not fulfilling those expectations in times to come, is the risk that I carry. So that's broadly the materiality mapping of Planetary Boundary with India Inc. as a whole for key industries, which has intersection around that. Additional risk is whatever assets are fossil based, if we are not allowed to use, those get stranded, and there'll be always a decreased valuation of environmentally harmful assets or businesses. Now, having said that, what we have broadly seen so far: first, planetary boundary; second, BRSR, that is reporting, and what are the matter that matters. Now, from a CFO perspective or finance perspective, what are the specific things which has an interplay with those things? The first one is CFO does a budgeting exercise. So ideally, whatever is the upcoming cost of planetary boundary, whether it's carbon tax or water pricing, I need to factor in. What I'm saying, I'm not making a budget for 1 month. I'm making a budget for 1 month, 3 months, 1 year, and also 5 years, 10 years, including terminal value of the business. So I need to incorporate carbon and water pricing and other aspects which are material to my business, which has an interplay with planetary boundaries. Second, when I do a capex evaluation, although I may be using NPV, I have to see that that asset does not get stranded. It is relevant today, but tomorrow it is prohibited. Third, whatever KPIs are measured or whatever KPIs are given by manufacturing, marketing, and others, I need to have an understanding as to how, as a second and third line defense, I'll have the system institutionalized, which is understanding KPIs and climate risk into internal audit as well as risk management. Fourth, India is a net borrower of funds. India is a net taker of equity. As we speak today, out of $80 trillion worth of various assets that has been deployed in the world in the name of investments, around $11 trillion worth of assets are only ESG focused funds. Earlier, 2 years back, it was only $3 trillion. Now it is 11. So the nature of investors, both in terms of loans as well as in terms of equity, are integrated with respect to ESG expectations. So supplier finance in relation to ESG expectation, a chartered accountant will have a direct role to play with such intersection. And finally, whatever we do, we report it in annual report. So annual report will cover ESG alignment, which is there included in chairman's letter. It will be included in strategy and targets. Example, net zero target may be 2030 or 2050, or say 100% recycle of water can be say target is maybe 2030, 2035, so on and so forth. Similarly, climate risk mitigation, which is with respect to physical risk and transitional risk, and above all, corporate governance, that is the committee which is looking at the board committee which is looking at ESG within their charter in terms of reference. What are the terms of reference that are included, and what are the KPIs that are trickled down to key management person in relation to ESG? These disclosures needs to be synthesized across the annual report, starting from chairman's letter to strategy, strategy to targets, targets to risk, and then finally to corporate governance. So, from a chartered accountant perspective, I see a direct impact of BRSR and related planetary boundary, covering budgeting, capex evaluation, traceability of data in the name of audit, or I'll say second line defense, directly dealing with suppliers finance, and finally the reporting over and above BRSR across various sections of annual report. We now move to why we are uniquely placed, and are there an alternative to us? Chartered accountancy is the only profession which has an intersection with financial integrity, regulatory compliance, and risk and governance. Moreover, we are generally considered as custodian of data, disclosures, and internal controls, including the ESG data. Moreover, we have a mindset of rigor, auditability, and materiality. With these background, chartered accountants can emerge from mere number crunchers to planet custodians. And that's the differentiating aspect of chartered accountants with respect to ESG. What roles we can play, specifically responsibilities that we can take in any corporate or institutions. And these are: first, we can be ESG risk assessors, physical risk, transitional risk, and also as part of broader enterprise risk management model. We can be assurance service provider with respect to ESG reports and the KPIs that managements are tracking. Whatever ESG data is generated across the organization, we can play a data governance lead role of ESG designing audit-ready systems, ESG systems and controls. We can play an important role on reporting and disclosures, be it through annual report, be it through BRSR, be it through integrated annual report, or be it through standalone reports on sustainability. We can integrate financial and non-financial data and can play a larger role in integrated thinking. And we can also play a role of strategist, which is advising CFO on CAPEX, on carbon budgets, on circularity. So can chartered accountant play a role in ESG transition? The simple answer is yes. And it includes risk, data governance, reporting, audit, integrated thinking, and strategist. What skills we need? We need a thorough understanding of BRSR, including leadership indicators, and its interoperability with GRI, SASB, and CSRD. We also need to understand life cycle assessment thinking, and it's a new subject on its own, also forming part of leadership indicator. We also need to understand the dealing with climate risk, that is physical and transitional risk. We also need to understand who are the various stakeholders with whom we'll have an interaction and decide what are the material issues, the concept of materiality. And above all, in the world where we deal in data at scale and at speed, an understanding of current digital ESG tools and dashboarding, including XBRL tagging, is required. These are the broad skill set. A, reporting framework. B, life cycle assessment of both product and process. C, climate risk assessment. D, interacting with stakeholders to identify matter that matters, that is materiality. And above all, tools dealing on the subject which we should be hands upon. That's the extended skills that is needed with chartered accountants. We are already uniquely placed to have an upper edge compared to most of the other profession when it comes to ESG. When we look at chartered accountants, instead of post-mortem of work, I would like to mention few things as a new expectations. When it's audit, we don't give only comfort and verification. We also talk about outcome and impact. When it's an issue to disclose, it's not disclosing just the profits, but also the purpose. And when we advise, it is not only on the negative risk, but also on the upside risk and resilience. Upside risk means an opportunity is not allowed to be wasted, is an upside risk that needs to be captured. Downside risk mitigated through resilience. So in audit, it is impact, in disclosure, it is purpose, and in advice, it is upside risk and resilience. That is a call for action for every CA. In final, CAs can be at the helm of ESG integration. The lowest level is regulatory compliance, which is BRSR. Using BRSR leadership indicators and stewardship, we can have financial stewardship. And with additional acumen, we can have strategic leadership, which is embedding ESG into the core corporate strategy as well as business model. This was all until in relation to as a chartered accountant. What we have covered so far are first, planetary boundary. It is more than climate change. There are additional 6 items to be considered. Then for all the planetary boundaries, we have considered what is the thing in relation to interplay with BRSR. BRSR, then we look at in the context of the world, what is emerging. And from in the context of the world, what is applicable for CFOs, and then what is applicable to auditor, and how we can be finally at the helm of affairs. The moment anybody says as a chartered accountant that he is at the helm of the affair, people ask him, iska fayda kya? How it is beneficial. So here I'll share something. The research, and this is the research question. The research, before I share the research question, let me tell you the what background of what research means globally. Whenever a PhD scholar publishes a paper, it is known as research paper. And that research paper is original research where they used various surveys, various statistical expectations, inferences with a 95% level of confidence, and a lot more. So whatever thesis they adopt, it is first reviewed by peers, and then there is a live viva with professors, and then it is required to be published as part of in the institution brands. So that is known as one research paper. My research was secondary research, where I integrated 30 research papers. I am presenting before you the synthesis, the meaning made out of 30 original research papers. And here is my thesis. When we declare thesis, we do not take a position. We take a position only once we have progressed on understanding each of the research papers. And then towards conclusion, we reach part of the conclusion that this part of the conclusion is fine. There are other parts of the conclusion for which further research is to be done. So here is my research paper. The question is, should Indian companies, whether mandated by BRSR or not, then there will be private company, promoter businesses, large conglomerates, voluntarily adopt latest standards on ESG? And if they do that, whether there is a measurable financial and strategic value. That's the original research. Here, the question thesis is, we do not understand whether it impacts strategically or financially. In a credible manner, we do not know the outcome. So the research is on the 30 research papers, and here is the approach. 30 peer-reviewed articles, that is research paper. Then explored ESG frameworks, case studies, books, and websites, and assimilated checkpoints of measurable values. Based on this methodology, we took the best of the best standards, and the current standard is CSRD, best of the best, which says about first setting up the targets, that is risk and opportunities, embed into the business model, assess 1200 data points qualitatively and quantitatively, track and define actions and obtain assurance on the relevant data points of ESG, and publicly disclose in standardized format. Once it is done, the research is done, the outcome of that was to prepare a CFO checklist that will map what are the sources from where we'll have a positive NPV, what are the sources that will have negative cash flows. Then, taking a bouquet of all the sources of cash inflows and outflows, iterate it enough that if there is a negative NPV, which are the elements that we need to reconsider choices so that there is positive NPV. And then go for phased assurance, targeted operations, and redesign of products. That was the challenge statement. The findings are, while we were doing it, it is not conclusion, it is findings out of those 30 research papers, that voluntary reporting is now critical. It is not a luxury because 11 trillion worth of investments, global investments, are asking for it. And those who are taking either capital in the name of equity or loan better have it now for having a competitive advantage. Second, I was surprised with the speed of integration of ESG into finance. It is going very fast. Whatever I see that if in 2023 there are additional 5 planetary boundaries which were never taken as a subject, all are now included in CSRD literature. Whatever is in CSRD, it is directly or indirectly also in IFRS S1 and S2. And generally, in a year or 18 months, it gets trickled down to Indian jurisdiction. So the speed of integration of ESG into finance is very fast. And there are more research needed in relation to additional points for interpretation of CFO in relation to NPV models. Conclusion: Indian companies must evaluate voluntarily world-class standards. And if the NPV is negative, iterate enough to make it positive. Now let me show you the research paper. This is an appendix to the research paper. I'll give you examples of value creation, say within sales, and there are 13 points. Out of these 13 points, let me take sales as one of the point and pricing power. The question to you, your current market share is, say, company's market share is 40% and the product is not considered as sustainable. If at the same price, the product is converted into a sustainable product, then instead of 40% market share, there'll be additional 1 or 2% customers who will shift from general category to your category. So because there is an increase in sales at the same price, your EBITDA increases. So that's a cash inflow. Premium pricing is not there for Indian market. So you'll have zero over here. But when it comes to European market, certain pockets pays more. So if you have global operations, maybe out of 100 units of sale, 1 unit which is relevant to a global market might scale up very fast. Few countries ban or have additional taxes in the name of CBAM, cross-border adjustment mechanism, if the products are sold in there, if it is not green. If we do not know how to measure what is green and not green at product level, then we cannot launch our product over there. So an early mover advantage itself is an advantage for cash inflow. So that's the CFO checklist. Stronger brand loyalty, and this is using statistical inferences that can be arrived at, which is also admissible with 95% level. All matters of statistics with 95% level of confidence are admissible even in courts of law. Similarly, there is higher accreditation and tender wins within the supply chain. So items impacting only sales and growth are 6, and we have 23 different clusters below. Now, what it is based on, I have not written. I have assimilated. It is based on these. The moment you see like this, a chartered accountant typically, when he refers, say, Companies Act or Income Tax Act, he says, as per Act so and so, section number so and so, that is quoted. And once it is quoted, it is considered sacrosanct. In sustainability world or in research world, what is quoted is digital object identifier number. It is here. And the name of the author, which is here, and the name of the article, it is here, and where it was published, it is here. So these are 30 specific research. You can take any research. For example, Christinen has sent mandatory CSR and sustainability reporting. They have covered something on that. Voluntary non-financial disclosures, investor revolutions. You take about it, and whatever is written in the checklist is coming out of peer review research papers. And these are the peer review papers. To understand which are the peer review that I need to take, I refer to certain books which are relevant for the subject, because books gives you framework over and above your own framework. Additionally, I refer to various websites for developing or enhancing my understanding, which I've attached in the paper. So my message to you is, there is a positive or negative case that needs to be assessed by CFO based on valid inferences and data points, which will decide your relevance within the organization. And these directly impact the numbers. With this background, I'll go back and start taking questions. What we have covered so far is, first, planetary boundaries. 7 has been exceeded. The focus of reporting on BRSR traditionally has been only on 1. Other planetary boundaries are also relevant, which has yet to be brought out through largely leadership indicators. And there is an interoperability of BRSR with global best ESG frameworks. The way the global frameworks measured, reports, and identified, if it is not codified in BRSR framework, we can draw references from there. Once it is done that, there is a larger role to be played within corporate with respect to ESGs by CFOs. Whatever is played by the CFOs is then audited by auditors. And when we play the role of a CFO has tools or means or insights to decide whether there is cash inflow or outflow on adoption of ESG related parameters. Wherever there is a negative NPV, if pure finance is the consideration, that can be dropped for the time being. And wherever there are positive, it can be integrated within the organization integrated thinking. Once it is done that, the CFO raises his bar from mere compliance of BRSR to financial stewardship, from financial stewardship to strategic stewardship. And once it is there, we as chartered accountancy profession are ahead in the ESG journey. With this background, I will now stop the presentation and start taking questions, if any.
Thank you, sir. We have received few questions, so I'll read out question. So first question we have received is, which boundaries have been newly transgressed in recent years, and what
Hmm.
are the implications does that have for financial systems or corporate disclosures?
Yeah. So this would have been question, I guess, towards the first 15 minutes of the session or half an hour.
Yes,
And since then, the larger aspect as a framework and specifics, we have addressed that.
yes, sir. So, so now next question is, how should companies prepare for upcoming regulatory changes stemming from this environmental crisis?
Okay, my answer is this. The preparation is not a case of whims and fancies. It's a systematic approach as to what are the matter that matters, and we call it double materiality assessment. Double
Yes.
materiality assessment is a concept which is enshrined in CSRD and IFRS S1, S2. In nutshell, what it means, what are the matters which I do affect the society, and if it negatively affect the society, sooner or later society will object to me and stop it or fine it or give me a quota or ask me to move out from there. So those matters are largely coming from the understanding of stakeholder assessment, which is there for the company, which needs to be, which is a scientific, which is a process driven approach that throws out those matters of concern. Additionally, when we speak to experts knows, like industry alerts, we that know these are the matter which are typical to these industry. For example, we touched upon agriculture and other textiles and other kind of stuff. So that's part A. Part B, the way wherever the planetary boundary is exceeding, or wherever the SDG is exceeding, or whatever there are certain hotspots in relation to water stress, which is not for entire India, but few spots. And wherever there are country priorities in the name of SDGs, these are the areas where we have an outside in perspective. Outside in perspective is because there'll be an external intervention upon us as to how we should operate, or what kind of taxes we need to pay, or what are the limits that we need to stay, or what are the consumption we cannot make, like water. So those are externalities imposed upon us. So concept of outside in materiality and inside out materiality put together, that systematic approach which has been described in IFRS S1, S2 and or CSRD will be a good way to start the thing. Earlier, the abridged version of that was already there in GRI. So people who are doing only BRSR, and that's why I keep on repeatedly saying, BRSR today, GRI started in year 2000 kind of stuff, 2 decades back. It already has those concepts. So use those concepts.
Sure, sir. Thank you. Again, next question I would read out. How accurate or reliable are the models and data used to assess planetary boundaries, and what are their limitations?
Okay. So there, I'll put it this way. There are very few scientific papers which has been agreed. The biggest point of scientists are they don't agree amongst themselves. But there are very few papers on more than thousand in on which more than thousand scientists has agreed. And planetary boundary is one such paper.
Yes, you also
So
mentioned in your session.
yes.
Yes. So now other question: Are planetary boundaries interlinked? That is, does breaching one accelerate stress on others?
Very much yes. Example, if you breach, say, biogeological cycle, okay, which is more putting off more nitrogen and phosphorus in agriculture, it directly impacts ocean acidification. If you kill forest, that is deforestation or change in land use, it's automatically increases the interplay with more CO2 in the air because less is absorbed. So it is not emitted more, less is absorbed. So indirectly we have more CO2 in air. And this interplay is also known as, there are tipping points within the interplay, that one goes to a level to a such that it just triggers the house of cards, and that is known as tipping point. So planetary boundaries, there is an interplay. Not only interplay, it can also lead to tipping points.
Okay. Yes, sir. So moving on to next question. From a scientific standpoint, how do breaches in boundaries like climate change or nitrogen loading translate into systematic risk of business?
Okay, I'll put it short term and long term, and I'll put it at three levels: something known, something unknown, and something long term. Short term is the moment you use nitrogen and phosphorus. If an agricultural label use, nobody questions it. If a company's use then there is a societal license to operate that can be revoked. Simple. So you keep on hearing that in relation to agriculture companies, company from Chinese, which were earlier, and it was not because they were from China. They are not allowed to launch the product, or even after launching the product, they are asked to withdraw. That's one. And these are live cases. Second, once you pollute certain things, pollution happens. If you pollute something, it is not that it will impact Russia first, it will impact you first. Your in your vicinity, the pollution and the harmful impact are more, including the aquatic life. Now, when you move, you see a lot of lakes are green lakes. Green lakes means what? Nitrogen and phosphorus has been emitted over there. So that's why there are plankton. So green lakes are bad lakes. It's not good lakes. So it is only around your industry which happens. So it impacts you. So the water is not usable, the aquatic life is not there, so on and so forth. Now, in long term, it's lead to ocean acidification. So whatever is there in relation to ocean acidification, world will pass global laws. World will say that these things need to be stopped. And the world says need to be strong. Stronger nations will impose such things on weaker nations. Stronger nations which imports product, they'll totally ban your products. So that's way it can impact, and it is impacting. It is only a matter of time that policies, licenses, and other things are yet to there. The bigger part is unforeseen. Unforeseen is the principle of retributional justice, which happened in the case of DTT. That if you are doing harm today, which you were supposed to know and you refuse to acknowledge that, I'll still prosecute you.
Correct. Yes, sir. So, sorry. So, moving on to next question. What
Yes, ma'am.
advancements in scientific tools or technologies can help companies better monitor their environmental impacts in line with the planetary boundaries?
I'll say you don't need tools. What you need is a basic. In your chartered accountancy, you have worked, say, in terms of reading, 1 full year across your inter and final, dedicated learning of many, 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 many books. Here it is learning additional couple of thousand pages. Once you know those couple of thousand pages, that is IFRS S1 and S2, and certain things in with intersection of tools, which is Scope 1, Scope 2, Scope 3 emission, which you can look at Earthster like platform. Similarly, for life cycle assessment, you can look at Open LCA platform, and you can read various world class. And these days you have Chat GPT. It makes a lot. And even for drafting this presentation, I've made use of Chat GPT to corroborate my understanding or to refine it or just to augment the speed of my delivery. So these are the tools that anybody can use, but there is no substitute for when you want to know a subject, take it as a subject. So this will be, if you have covered 8 papers in your final CA, take this as 1 full paper for your additional CA, post CA.
Agree. Yes. Next is how can life cycle assessment (LCAs) be aligned with planetary boundary metrics to guide product design and strategy?
I'll answer this way. LCA is step one of LCA is what? For the existing product, what are my carbon footprint? What are my water footprint? What are my harmful footprint? And technically, people play in that I'll do only cradle to cradle, that is gate to gate, keeping aside all the nonsense and talking only on real thing, right from the start to the end of life disposal. What is the product life cycle? That is the impact. And the free tool that I would like to address is use it as a starting point is Earthster. So once somebody understand what LCA means and he plays with the tool for a week, he'll be able to do that. Okay, if the intent is sincere. Now, once you do that, you know what the current state is. So it gives you outcome that my total emission is this much, total water consumption is this much, and total harmful aerosol is so much. Then you need to tweak the input or output, or the customer or the supplier, or the product substitution, and try to remodel your product using the same LCA. So using your own experimentation, first starting from where you are versus where you want to be, you can design your product. That's LCA. That way LCA can be used.
Yes, sir. Very, very well answered. So, thank you for answering all the questions. And I would like to say it was a wonderful session with all the live examples, also the research paper and thesis. But to give the formal vote of thanks, I would like Ankur. Ankur, can you please give vote of thanks to Mr. Rakesh Agarwalji, sir?
Yes, yes. It was on behalf of committee and participant, I extend our heartfelt gratitude to Mr. Rakesh sir for a illuminating and inspiring session. Sir, your 2 decades journey from leading ESG reporting to guiding clients brought us a rare and depth and practical insights to today's discussions. Your synthesis and your mastery of sustainability framework, circular economics, thinking and life cycle assessment, scope and analytics have equipped us with the constant tools to evaluate our ECG minds ambitions. We appreciate your time you took and demanding schedules to share your knowledge with such clarity and passion. Your talk was clear, practical, and very helpful for us. And you show us a very real world action look like. Our thanks also go to the organization committee and team and all the participants for your attentive engagement and thoughtful questions. With today's insight fresh in our mindset, and let's commit to measurable, transparent progress and sustainability path given Mr. Rakesh sir has completely laid out. Thank you, sir, once again for a wonderful session. Thank you.
Over to you, SRSB team. Please take it forward.
Thank you, Manisha ma'am. Thank you very much, Rakesh sir, for enlightening us about planetary boundaries. That's a wonderful session. And thank you, Manisha ma'am and Ankur sir, as well as for being our moderators of today's sessions. And thank you, everyone, for being part of this wonderful session. And have a nice day.
Thank you.
Tech support